Hi traders, good morning, good afternoon, good evening. Welcome back to the channel. Today we are going to review Bank Nifty. Today we'll remove all the indicators and just try to look at the price action and see how we can identify the trading zones where we can take an entry and exit. So let me delete this. We are on investing.com. So this is a 15-minute time frame. Let's go to a higher time frame and start analyzing from 1 month period. So 1 month we have seen. So we will put a line from here, which was the lowest point. Okay, so we have 3 touches on the line, which is good. So this is the major trend line. Okay, so the market has bounced from this line and it is holding up. So now there is a green bar and there is a red bar. Okay, so this is a big fall from 30,000. So we can see that this is called as drop and this has formed a base. Either it can be a rally up or it can be a drop. So it can be a drop, base and drop. So I'm expecting this to be a drop because usually this is also a setup where we have a green candle ignored setup. Okay, so this is called as GBR. So this is green bar ignored setup. So mostly this will break the low of this bar and it can break this low also. That is what I'm expecting, but let's see, hope for the best. And let's look at the 1 week time frame. 1 week time frame is more or less in a sideways pattern. So this was the base candle which has formed. The body is only 50% here and the market is staying in the same range. Let us mark the high and low of this. Let's mark the high. Okay, let me delete this and put a horizontal line here. So this can be a horizontal line. Okay, so this is our line. Let's change the color to darker color so it can be visible. Yes, so this is a green line. So we have the high and we have the low, which is this line. So we can see that this is in a range. So this is a red bar, which is a drop. Again there is a base form and you can expect a drop again here. Okay, so let's look at a daily time frame now. So daily time frame, you can see this entire space is marked as a range for us. So what is that we can understand from this? Let's see the pattern which is formed. So these are all narrow range candles. I see there is a lot of confusion here because I think most of the people are expecting the market to go up, go down, and not much of a trend which is being formed. So mostly this kind of a period is consolidation period where a lot of retail traders also enter in the market basis the news and they want to buy puts. And maybe this is the time when all the new traders get excited and get good luck in the market and they enter the market, because this is the period where all the new traders will get some amount from the market and they feel lucky that yes, market is a good place, we can earn money. So this is where they start entering the market. So that's the reason that you will have so much of volatility and you will see that it doesn't move in the fashion which it used to move in the previous trending sessions or previous low volatility sessions. So people think that this is how the market is going to be, so let's start trading. So that's how they enter into the business, which is good. Most of the professional traders wait for the retail traders to come to the market so that they can get the money. Market, there is always exchange of money from hand to hand. Somebody is losing money and somebody is gaining money. The person who is patient, he is gaining money, and the person who is impatient is losing money always. So we have to be careful with that. Yeah, so we are at the daily time frame. So let's analyze this on a 15-minute time frame. So I have drawn these trend lines from the peak. So this was the previous peak. So we have drawn a trend line from this, and this is touching the nearest peak. So these are the two peaks which are minimum for any trend line to be there. And there is one more trend line we have drawn from the low to see. So this is a pattern which has been formed, which is called a symmetrical triangle pattern. And then we have drawn another trend line which is touching these three peaks. So we have to wait. If the market opens up above this line, then we look out for a retracement till here so that we can take a buy entry. If the market opens below this, then we look for a retracement till this level so that we can take a short entry, and the target will be till this level. These are the lines which we have drawn on a higher time frame. So these are the levels which it is going to respect. Okay, so we go to a lower time frame now, 5 minutes time frame, and see how it is doing. So if you draw the trend lines on higher time frames, it becomes very easy to understand on lower time frame. See how nicely it is been visible. So you can see that this is the next area of resistance. If the market opens anywhere here, this will be the point where it will get struck, because this is the place where it has dropped from, and again it has dropped from this level 2 times. There can be a history in the past also at that level. If you go back and see this has been a level. See, so there is always a saying that you should always look left to trade for future. So you have to always look left and see what has happened at those levels. So these kind of spikes will tell you why they are spiking. If you put any kind of indicator also or super trend, they will also tell you this kind of story. But today we are going to show without any indicators. Okay, so this is how it has reacted. You should always look out, once you have formed a view and formed a trend line, then you should look out for a reversal pattern at those trend lines so that you can take an entry. Don't take an entry on a normal candle, just try to look out for a reversal candle and reversal patterns. Okay, so this is about Bank Nifty. Today I'm going to talk about another important topic, is what are the tips you should follow to be a successful trader. So I have written some of these tips here. So these are the 6 rules which you should follow very strictly. So let's see what are those rules. Okay, so first is environment. When I say environment, you should have a steady source of income. That means your external environment has to be proper so that your psychology remains intact. I hope you are recording. Yes. So your psychology, let me keep it like this. Okay, so your psychology has to be properly stable. So if you have a steady source of income, if you see any of the successful traders, either they will have a job or a business or a partner who is earning, and some people are cash rich, some people are merchants, big timber merchants and all that. So you have to be careful and you have to have a consistent source of income, so your mind remains in that zone of trading and you don't have tension that if I lose this, I'm going to not make money, what I'm going to eat. That kind of thought should not be coming to your mind. So this is very important. And second is education. You should always attend the trainings and seminars, paid training seminars, and that too not from every Tom, Dick and Harry. You should attend it from proper renowned, or go to a BSc site or an NSC site, take their courses and try to do an ISM certification. So all these things you can do and get trained properly in the market. Do not go by the tips, because tips will not make you rich. Okay, so you cannot catch the tip which is given to you, because by the time it reaches you, it will be gone. So you have to find your own system and set up your own rules. Third point is rule-based trading setup. So you need to have your own setup. Say example, we are having this kind of setup where topping tail bars and bottoming tail bars at a proper location, we are going to use that setup for trading. So that is how you have to stick to that rule and trade only that, and no more trading after you hit your day limit. So that comes in your risk management. So if you follow this risk management rules, whatever you are comfortable to use in trading, always put 1 to 2% as risk. Like if you're putting a 5 lakhs, then 1% of that you have to say 5,000 will be your cost which you can use. So you should take a trade like that. And the fifth rule, risk management is very important for you. Always follow that 1:2 or 1:3 kind of a risk to reward ratio. This happens only if you have a proper setup. If you trade randomly, this is never possible. Always trade with same capital. That means if you have invested about 2 lakh rupees and it has become 4 now, so remove the 2 lakh from there and invest in some other place. Invest. So you have to invest in some other place. So you never deposit your money into a trading account. It is only withdrawal you have to do. You have to reach to that skill. If you follow that rules, then you will be only withdrawing. That should be the epitome of your success. So only then you will be able to make a living out of markets. And once you sustain that, also avoid disturbance. Avoid going on social media, telegram channels and groups during market hours, because once you have formed a view, took a trade, and that trade is going in your favor and somebody gives you a different view, then you get into panic mode. So try not to go into these groups. You can go after your trading is finished to see what people are saying. If you are able to get some new analysis or something new to learn, then go. Otherwise, don't get bogged down by other people showing their MTMs and showing their skills. And always believe in yourself and believe in your own setup. In market, there is no expert and there is no ranking which is given. Every trader, even an expert, is a newbie in the market. The moment he trades, puts a trade, so either he can lose or he can make. So mindset, psychology is very important, and you can beat the best of the best guys if you have the right mindset in the industry. You can also come up with your own research, your own style of trading which is unique to you, which can give you consistent results. So these five points, 6 points, are very important for you to be a successful trader. And you have to keep this in mind if you thinking to lose. Most of the people are losing their jobs these days, so it's better that you don't enter into trading with this kind of mindset. Always create a multiple source from somewhere else. Most of the traders these days, you can see they have a YouTube channel, they have a training income, they have a sub brokership income, and then they have trading income. There are like 4 sources of income, and that 4 sources will become 5 or 6 or 10 sources if you have office setup, and then you have invested into real estate. That can multiply. 4 5 sources will multiply into different, and from all those sources, when you start getting enough money, then you can think of leaving your job and then sustain, say that you are financially free for that life. So your goal should be that. So these are very important, guys, and follow these rules. And I am not on a video cam today because the saloons are all closed, so no haircut, so it will not look nice. So thank you so much for watching, and please do subscribe and share these videos and motivate others also to watch these videos which I am giving for free for everybody to learn. Thank you so much for watching and have a great day.